Good morning and welcome to this session of the live coaching classes of the Board of Studies of the Institute of Chartered Accountants of India. In the last session, we started on management and administration of companies. Right. I also greet all the students who are here. Yes, good morning. Sumantanjali is here. Subhash Tete, Naiman Rafiq Bhai, Milton Mahanta. Nice to see all of you. Good, welcome. And let's hope we have a great session today in terms of learning about management and administration of companies. Those days, we used to call this meetings and proceedings. Basically, we spoke about meetings. So in the last class, we saw the different types of meetings. Then we went into general meetings. And we saw annual general meeting. We also spoke about extraordinary general meetings. There are two types of extraordinary general meetings. Let's quickly cut to the chase there and talk about that. Right? Where we spoke about the power of the board to call an extraordinary general meeting whenever it deems fit. So that is the option of the board. A company can have any number of EGMs, but it should definitely have one AGM. Every year, every calendar year, there should be one AGM and only one AGM. Companies do not have two AGMs and all. AGM is an annual event. That's why it's called annual general meeting, right? So one of the three rules is there should be an AGM in every year. EGM is not like that. EGM is optional. You want it, you have it. Otherwise, you don't. Now, what could happen is the members of the company may feel that the company is not being properly run by the board. Okay. And that the board should consider certain things and take certain decisions. And they may want to discuss it. Now, normally, general meetings are called by the board. It is the board's prerogative to call a general meeting. And company management being what it is, they will try to reduce the number of general meetings as much as possible. The reason is it's costly and it's painful procedurally. So unless absolutely necessary, you wouldn't find companies calling general meetings. They will call a general meeting when, for example, there's an intercorporate investment. You are investing in some other body corporate, excess of limit. You are exceeding the limit prescribed. You will see this section later on in 186. You have no other go. You have to get the approval of the shareholders. At that time, you will call a EGM, extraordinary general meeting. Right? But sometimes the members may want to discuss certain things. And the board may not do it. The board may not call for a EGM. In which case, we'll be seeing section 100 now. Today, we'll begin with section 100 where the members have the right and power to requisition a meeting. Requisition means a more powerful word for request. When I request, it's very polite. Requisition is compulsory. So, the board may, whenever it deems fit, call an EGM. May. Later on, when you come to interpretation of statutes, or if you've already learnt it, I'm not sure. The word may is a power. There is an option. Whenever the word may is used, there is an option to do or not to do. Whenever they want, they can do. May is a power and there is an option. Shall is mandatory. It is a duty. There is no option. Once the requisition is made by the requisite number of members, the board shall call an EGM. Right? So we are going to go into that. Calling of EGM at the requisition of members, section 100, right? The first and important thing is the requisite number of members, right? The requisite number of members. You may have to remember this. This is important, right? As you are aware, there are two types of companies, or more than three types of companies. You have companies having a share capital. You have companies not having share capital, limited by guarantee or unlimited company. Whatever. So you could have a company limited by guarantee having share capital. You could have a company, unlimited company having share capital. So basically, it's company having a share capital, company not having a share capital. When a company has a share capital, I can easily calculate the total voting power. When a company has share capital, I can easily calculate the total voting power. In the course of today's session, we'll be talking regularly about voting, because the main thing that happens at a meeting, or rather a general meeting of a company, is voting. That is the whole purpose of this meeting. The rest of it is just frills and fuss. Finally, the resolution is put to vote. And on that vote, how many people for, how many people against? That decides whether this matter is done or not, whether the company has taken the decision or not. Now, so for that, an important number is the total voting power. Right? That is that nothing but, if it is having, it's a company having a share capital, then it is nothing but the total number of equity shares. For example, if a company has 1 lakh equity shares of 10 rupees each, the total voting power of this company is 100,000, 1 lakh shares. So if all the members attend and they vote on a poll, there is, we'll come to that a little later, then the total number of votes which can be cast is the total voting power. That is 1 lakh. For your information. You come across this term regularly in the law. Right? In this section, they have prescribed the requisite number of members, not in terms of number of members. So they have not said 10 members or 1/10 of the total number of members. If for a company having a share capital, they said such number of members who hold on the date of the receipt of the requisition. Such number of members who hold on the date of the receipt of the requisition not less than 1/10 of such of the paid up share capital of the company as on that date carries the right of voting. So please note 2 questions you might want to ask me. 1, sir, would differential voting right shares be counted for this? Yes, provided they have a vote. Suppose you've got differential voting right shares where you pay 2 times the normal dividend but no right of voting, that's okay. But those guys won't get counted for this. But suppose we already saw it. Do you remember when I spoke about differential voting right shares? We already saw this. Suppose the company has 1 lakh normal equity shares and 2 lakh differential voting right shares. The 1 lakh normal fellows will get 1 vote per share. 1 share, 1 vote on a poll. But the differential voting rights walas, they might be having only half a vote. That is, for every 2 shares, they get only 1 vote. No problem. They'll be included in this calculation. But for calculating the voting, we will not take them as 1 vote. We'll take them as half a vote. Or for 2 votes, we'll count 1 vote. But be careful. This limit is not prescribed on the basis of voting. It's not as if you have to calculate the total voting power and calculate 1/10 of the total voting power. Here you have to calculate 1/10 of the paid up share capital. So in my example, 1 lakh normal shares, 2 lakh DVR shares. What is the total paid up share capital? 3 lakhs. On that I need 1/10, 30,000. So members holding not less than 30,000 paid up share capital can requisition. Anything less than that, they do not form the requisite number of members. Got it? See, when I'm giving you an example like this, which is not on the screen, I don't have a board here where I can write it when I don't want to do that. Seriously, I know there is a whiteboard. Please don't educate me. I'm aware of that. I'm not using it. Consciously, I'm not using it. Okay? Because I find it very clumsy to write on this thing. So kindly don't mistake me. That's why wherever possible, I try to use or else an Excel spreadsheet. I prefer to open an Excel and then work on that rather than. The point I'm making is have a sheet of paper and pen with you always. When you're attending, not only here, any online class, any educational event, never go there without a pen and a paper. Make a note of the example I gave. Okay. So we are talking about 1/10 of the paid up share capital. Normal, a company which does not have differential voting rate shares, 10 lakh equity shares, then members holding not less than 1/10 means 10 lakh 1/10 is 1 lakh. So members holding 1 lakh paid up share capital should be, so it may be number may be even 1. Please understand, though the word members is used, think about it. One guy, one single person can hold 50% or 25%. One single guy. So out of 10 lakh shares, one single guy can hold 2,50,000. He can requisition. A single member can requisition, not a problem. One more understanding I'm getting from the words of this section, on the date of the receipt of the requisition. So the number of members, the minimum number should be there on the date of the receipt of the requisition. Thereafter, some of them could have walked out. They might say, I'm not interested. But on the date of receipt, if you had 1/10, there is enough. Okay. Later on, they might say, I'm not interested and walk out. But still, on the date, if they were there, the requisition is valid and the meeting has to be held. The meeting shall be called by the board. In the case of a company not having a share capital, you cannot, you don't have the convenience of this 10 lakhs, 1 lakh and all that. Here they talk about total voting power. Such a number of members who have, on the date of receipt of the requisition, not less than 1/10 of the total voting power of all the members having on the said date a right to vote. Right? So for when you are not having share capital, how do I measure? Either one man, one vote, or we might have defined shares. So I might be having 20% share in the profit. You might be having 30. So when we total up everything, I get 100 now. Out of that, I should have 10% or more of the 1/10 of the total voting power. Right? Here they use the word total voting power because there earlier it was easy for them to say paid up share capital. And I have a feeling that consciously this section does not use the word total voting power for company having a share capital. Because I think the intention here is that if differential voting rate shares are there, for the purpose of this limit, you will take them as equal to the equity shareholders, total up and then calculate 1/10. Because if they accept total voting power, then the differential voting rate shareholders will be counted as half. But in this case, no. Right? But for a company not having a share capital, I don't have this. So we have to see there is no shares, nothing is defined. It's a company limited by guarantee. No shares. Everybody has given a guarantee. Then one man, one vote. That's all. So if the company has 100 members, then minimum I need 10 members. Because they are 10 members or 1/10 of the total voting power. One man, one vote means what? Yeah. One man comes. I tell you, most of the time, companies not having a share capital will not be commercial companies. Just take it from me as a guidance. If you like, as an experiential statement. Okay. But by and large, if I'm starting, if my client or somebody is starting a commercial company with the intention to make a profit, we would generally not incorporate a company not having a share capital. We would ask them to go for a company having a share capital because so many advantages are there if you have a share capital. So you'll find that very few companies are companies not having a share capital. They would also be Section 8 companies. Section 8 companies where it could even be a company limited by guarantee. Right? If it has a share capital, then no problem. I can go to the earlier. Some of them may be limited by guarantee, in which case, one man, one vote. One shareholder, one vote. That's how it is. So if there are 100 shareholders, I need only 1/10. That is 1/10 is total voting power. See, on show of hands, one man, one vote. So total voting power is nothing but number of people, number of members is the total voting power. Out of that, 1/10 is needed. Okay. And here they don't use the word holding. There in the earlier limit, they said holding, not less than. Who hold. Whereas here they say who have. Having on the said date a right to. Right? Why I'm going a little depth into this? Because this particular limit will be again mentioned elsewhere. When you come to circulation of members' resolutions, they wouldn't give you a separate limit. They will just simply refer you to 100. They will say the requisite number of members should be the same as mentioned in 100. So this limit is to be remembered. It's not rocket science. I have explained it to you. Of course, if you have any doubts, you can raise. I will definitely answer it. Wonderful. So, Mantanjali confirms that you are aware of may and shall. Fantastic. Thank you. Now we come to the rules relating to the requisition. We have Pooja here. Thank you. Nice. Good morning. Thanks for the greeting. Rules relating to requisition. The requisition shall set out the matters for the consideration of which the meeting is to be called and shall be signed by the requisitionist and sent to the registered office of the company. It should be signed by the requisitionist and sent to the registered office of the company. No uploading business. You have to send it. Send could be by courier, by ordinary post, or you can go to the company's office and deposit it there and take a signature. Obviously, you need an acknowledgement. Okay, you can, and they have to give it to you. Because this date, the date of deposit of requisition is a very important date in this section. And what will the requisition state? See, I'll give a scenario. Please try to understand it. It's an example I'm giving you. Just to make it practical. The board of directors may have decided to sell one of the properties. Okay, they have the right to sell. The board of directors have the right to take a call on, so long as they are not selling the entire undertaking, the whole or substantially the whole of the undertaking. They have the right to sell. But members may have something to say about that. So the board may have made some announcement or something that we are going to sell such and such a property at such a price. Now, some of the members may feel that the board is not doing something correctly. So they may want to talk about it, right? So at which point in time the members will have the right now. No, so they will see they expected the board to call an EGM and ask their opinion, though there is no legal duty. So long as the undertaking is not sold, so long as the entire business is not sold, the board can actually take a decision on sale of assets. The MD himself can take, the board can take. Sale of assets, the board can take. That's for information. But it may be prejudicial. According to the shareholders, the board may be doing something which is wrong. See, that's why you remember 100 will be invoked only when there is a dispute. If 100 is being used by shareholders, that means the company is in deep shit. And invariably, I'll tell you one more thing from my practical experience. If section 100 is being invoked by members, they are using 100, it means they are having dispute between two factions. There are two groups wanting different ways of running the business. So one group will, for all you know, both the groups may be in the board of directors. One could be a minority group, the other could be a majority group. So in the board meeting, that discussion would have come up when the board, the majority in the board would have said, we are going to sell the property in Nariman Point, and so-and-so will buy it, who is again a director, related party. Nothing wrong. There are disclosures, etc., but he does all that. But the other group feels, hey, you're cheating us. It is not fair. Then the board will say, do what you want. Yeah, this is how we are doing it. At which point in time, he will say, let all the members will take a call. But still, if they are a minority, it won't work. They need a majority. Then only this. Think about a reverse. I am a shareholder with 60% holding. The remaining 5 fellows are having 40% stake held by 5 fellows. Single shareholder holding 60%. I am the majority. I have the controlling interest. But they are the board. I'm also in the board. But 5 of us, 5 of them plus 1 me, 6. In the board, they will always be able to take a call because they are more. Whereas, and I honestly trusted them. When the company was formed, I invested 60%. I was sitting in Dubai. I invested thinking that these guys will take care of my interest. But later on, I find these guys are doing nonsense. And now they want to sell the property also to themselves at a lower price. So who is getting affected? Me. Now I am a 60% shareholder. They are controlling the board. So I call them up and tell them, hey, let's have a meeting to discuss this. They are saying, go to hell, what do you want? So now I will invoke the power of section 100 and I will call a meeting. I will deposit a requisition. See, this is where you and I as chartered accountants have to advise clients like this. Okay, what to do, Srikanth? This is what you have to do. Okay, then these rules become relevant. But remember, normally well-functioning companies, good companies, pakka companies, section 100, they won't even know what it is. Another case where 100 requisition I've seen is non-profit organizations, where egos. There will be ego issues will be there. So they will requisition a meeting, have all sorts of fightings in all tamasha will go on in this. The requisitionist meeting will be one big tamasha where everybody will come shout, argument and all. Unless there is somebody, a professional like a CA or a CS sitting there controlling it, they will go mad and that meeting will become a waste. At the end of the day, they will either break up, no decision will be taken. I'm giving you some practical inputs. The idea is to help you to get the flavor of this section. The mechanics of the section is like this. The requisition is to be deposited. The requisition may be in writing or through electronic mode. So even an email is good enough. Okay, email. But if you are going to send an email, then you have to scan the requisition and attach it. Because the requisition shall be signed. Right? So 17.1 says it can be in electronic mode, but you have to sign it. The signed copy should be scanned and sent. The requisition shall be provided at least 21 days prior to the proposed date of such extraordinary general meeting. This provision, I have been trying to make sense of it, unable to understand. Because, see, the requisition will trigger a certain actions. The requisition is not the notice calling the general meeting. The requisition is only a request to the board to call a general meeting. Only after that the board will send the notice. Then 21 clear days, then only meeting. The board has 45 days to hold the meeting. We'll see that. So how you can time it in such a way that it will be at least 21 clear days, I seriously don't know. But anyway, given the rule, whenever you deposit it, the board will hold the meeting only beyond 21 days. So not a problem. But still, I really don't see the point of this rule. Now, we go on to the very important part, which is the timings. You might want to remember it. The procedure for calling of EGM at the requisition of members. Sorry, I'll just... Sorry, there's a... Yeah. Okay. Good shot. Thanks for the patience. So, procedure for calling of EGM at the requisition of members. I have diagrammatized it for you. I have converted it into a diagram instead of words. So, the most important point, the starting point is the date of receipt of a valid requisition in regard to any matter. So, in our example, the members want to discuss the sale of the property, the 3,500 square feet apartment or office space at Nariman Point belonging to the company. That is the subject. We want to discuss about the sale. So they have mentioned, we want to know more. I want to know more detail, and I am not happy with their current deal. So I want to talk about it, or we want to talk about it. If it's more than one, agreed. So that requisition is deposited. That date is very important. See, tomorrow if this matter goes to the tribunal, first thing the tribunal will ask is, when did you deposit the requisition? Proof. Either there is a registered post, or going to the company and depositing it, or an email, so that you have a proof that you have sent it. It has reached the company. Because from that date of receipt, so if you are the requisitionist and you are sending it by ordinary post, it will be deemed to be delivered 48 hours later. If it is speed post or RPAD, registered post, no problem. We have a proof of delivery. Courier, proof of delivery is there. It's an evidence in a court of law. Very important, because that is the date of receipt of the valid requisition. If it is an email, there is a delivery notification. It's a proof. So whatever it is, that is important, because from that date, you have to count 21 days. So the board of directors has 21 days to proceed to call a meeting. So they can call. So they have 21 days to contemplate, go for legal opinion, even. So within 21 days, the board should call so as to hold the meeting within 45 days. So I'm getting the requisition today. Okay, you leave today, you count, it's not 21 clear days. So from today, you count 21 days. Within the 21 days, the board has to call. So the notice for the meeting should go within the 21 days. Later on, you'll be seeing that notice for general meeting should be given 21 clear days before the meeting date. So they have to give that notice. So for that's why they give them 45 days. Remember, it is not 45 days from the end of 21 days. No, it is 45 days from the date of deposit of the requisition. 45 days from. So within that time, the meeting should be called and held by the board. Right? So the requisitionist should give the the notice, and they have to wait for 21 days whether the meeting is being called. The board is not calling it within 21 days. Then the requisitionists themselves may hold. They can call and hold the meeting within 3 months. So the board does not call, then the requisitionists themselves may call. In which case they have to give a notice in the normal way. We have got some rules for that. Basically, they have to issue the notice to all the members. Right? To all the members. Now we are going to the, so I hope this is clear. The date of deposit of requisition, within 21 days, the board should call the meeting. And within 45 days from the date of requisition, from the date of requisition, the board should hold the meeting. So count the days. So the idea is simple. Within 21 days, the notice should be given. But the date of holding the meeting should not go beyond 45 days from the date of requisition. It is easy to confuse and think it is from the end of 21 days. No. Okay? Yeah. Sub-rule. If you want to call it something, you can call it sub-rule. Or sometimes see sections, we call them subsections. Whereas rules, sometimes we also call them sub-rule. Section 17, sub-rule 1. I think that's your question. If it is a bill, then we call it clause and subclause. So constitution clause and subclause, not sections. Okay. So whereas in rules it's called sub-rule. So 17 sub-rule 1 or 17.1. So this is clear. Again, note it. On failure of the board, the requisitionists themselves may call and hold within 3 months from the date of deposit of a valid requisition. That's why I given this diagram so that you will not have any confusion on this. Okay. So in the examination, you will be given dates and all. You would have to just see that within 21 days, the notice is sent. If the notice is not sent within 21 days, straight away there is a failure to call. Then the requisitionists themselves can proceed to call and hold. But for that, they have been given 3 months because, see, just because there is a failure to call doesn't mean I can call it immediately tomorrow. I may have my own constraints. So they say you got 3 months. Within that 3-month period from the date of requisition, somewhere in this period you are entitled. But if the 3 months from the date of requisition is gone and the requisitionists have still not called and held, then the matter is over. Thereafter, the matter is over. Okay, good. Now, the meeting called and held by the requisitionist shall be called and held in the same manner in which the meeting is called and held by the board. So, all the rules of meetings we are going to see, like notice, proxy, poll, voting by show of hands, chairman, everything will apply to the requisitionist meeting also. Remember, even a general EGM is a meeting of the members. The board is only facilitating. Once the meeting starts, the chairman controls the meeting. Now, chairman will be a member. Chairman cannot be a non-member. We'll see that later. Okay? And the members and the chairman, they are the other board of directors who are not shareholders. As a director at the general meeting, he cannot talk. As a director, only he has a duty. He will be questioned by the members. He has no comment. But as a member, they have the right to talk. Director should only answer a question which is asked. That is the duty of a director, because any general meeting is an opportunity for the owners, the members, to come and demand explanations from the management. So, which is why rules, we are going to see all those elaborate rules. So the EGM requisitioned by members is a powerful principle of democracy, especially in a capitalist context, because somebody has invested money in that business. Now he has the right to ask what's happening here. And if you don't hold a general meeting, if you deny accountability, Section 100 says he has the right to call and hold. And he can take decisions at that meeting. Right? Now the notice shall specify the place, date, day and hour of the meeting and shall contain the business to be transacted at the meeting. The requisition should convene the meeting at the registered office in the same city or town. Village I have added with a question mark. It's my addition. The rule only uses city or town. So I don't know why this is so. That's why I put a question mark there. It is not in the original rule. Please don't. But why village is allowed? Because normal AGM, etc., they say same city, town or village. Why this alone they say same city, town, city or town, I don't know. Suppose the registered office is in the village, what they will do? Okay. Right. Where the registered office is situated, and such meeting should be convened on any day except national holiday. So this meeting need not be during business hours. It may be on a Sunday, on any day, but then it should not be on a national holiday. We already discussed this when we spoke about EGM, right? Notice shall be signed by all the requisitionists or by a requisitionist. I don't know. Plural is used here. Here requisitionist, but then the plural is used in the section. That's why I put SIC. SIC means so it is carried. I am not responsible for the grammatical error. It is there in the original rule itself. Okay, not my error. So by a requisitionist, duly authorized in writing by all other requisitionists on their behalf, or by sending an electronic request attaching therewith a scanned copy of such duly signed requisition. I told you now. So either all of them sign it, okay, all of them have not signed it, then all of them can authorize one man who will sign and send it. See, they may have an informal meeting themselves. When they will come together and say, hey, we have to do something, then the lawyer or chartered accountant will advise them and say, you can go on 100 requisition. Okay, what to do? I'm going to Dubai, I'm going to Muscat. Okay, chalo, you all go. Now you authorize this fellow and go. He will make it. So he will be authorized and he will do it. Then that authorization letter becomes very important once it goes to tribunal. You don't have to prove to the company. But when it goes to tribunal and whether you had the right to make the requisition or you authorized in writing, this man has to produce that authorization. Or by sending an electronic request attaching therewith a scanned copy of such duly signed requisition. Clear. Whatever you are doing. In all cases, signed, there should be a signature from all the requisitions somewhere to say that they are party to it. Now, if the resolution is to be proposed as a special resolution, later on, maybe in the next class when we talk about special resolutions, you will come to know that when I am proposing a resolution as a special resolution, the notice calling the meeting should mention that this resolution is to be passed as a special resolution. Very clearly. In fact, in the agenda itself, you'll say, to pass, if deemed fit, the following resolution as a special resolution. The notice calling the meeting should mention it. And also in addition to that, they should give certain statements, certain information. Anyway, we'll come to that when we come to 114, 115. Later, we will talk about it. Now, the intention to propose the resolution as a special resolution should be duly specified in the notice calling the general meeting. That's all. Don't get afraid about 114. Very simple section. We'll see it later. Later on, immediately, a little bit later, we will see that any business to be transacted at any meeting other than AGM is a special business. Little bit later, we will see business. Next topic, we will see business. Business is nothing but what is being transacted. So, other than 4 matters at an AGM, any matter transacted at any meeting other than AGM is a special business. So, special business requires an explanatory statement. The rule. When the EGM is called by the board. So, when the board is calling an EGM, at the EGM, whatever matter is to be transacted, is a special business. So the board has to give certain explanatory statement. But for an EGM requisitioned by members, no such explanatory statement is needed to be annexed to the notice. The requisitionist need not give their reasons. No such explanatory statement is needed. It's an exception to the general rule. Whenever you are calling an EGM, all matters to be transacted at that EGM is a special business. So for each one, you have to give an explanatory statement. What it is, why is it being done, so that the shareholder will know why he is coming and voting. But requisitionists need not give reasons. This is the law. In fact, before, it was not earlier in the section. 169, the old section, did not have this. New 100 has it. But there is a famous case law. Okay? Swaraj Paul versus Life Insurance Corporation of India. Swaraj Paul versus Life Insurance Corporation, where it's a famous case. Where one of the issues that came up was the LIC was requisitioning a meeting. LIC was requisitioning a meeting. So one of the objections given by the company was that LIC is an instrumentality of the state. Therefore, they have to state the reason. LIC, even now it's a corporation. Now it's a company, listing shares are listed. But in those days, it was a corporation, which was nothing but a government PSU. It was a government undertaking. So they said, you are a government, therefore you have to state the reasons. There in the LIC case, the Supreme Court has said, no need. LIC in this case is not government. They are only a shareholder. And as a shareholder, there is no need to give the reasons. They can disclose the reasons at the meeting. When they can move the resolutions along with when they give the resolution at the meeting, when the resolution is proposed, at that time they can give the reasons for your information. The notice of the meeting shall be given to those members whose names appear in the register of the company within 3 days on which the requisition is deposited with the company, a valid requisition for calling an EGM. So you have to give notice to guys who are members within 3 days from the date of deposit of the requisition, right? They also say where the meeting is not convened by the board, where the board is not convening the meeting, okay, then the requisition is, they can call, hold and conduct, right? So for calling it, they need a list of members now. So this rule says the requisition shall have a right to receive the list of members together with the registered address and number of shares held. And the company is bound to give the same made as on 21st day from the date of receipt of valid requisition, together with changes, if any, before the expiry of 45 days. So, we are the requisitionists. We have deposited. For 21 days, we are waiting. The board is not calling. Now, I will write to them and say, please give me a list of members. I want to call myself. So, from the end of 21 days, up to 45 days, within this gap, they have to give you the list. But there seems to be a slight conflict here now. They are saying the notice should be given to those guys whose name appear within 3 days. Whereas here they are saying the list will be given only as on 21st day onwards. There seems to be a conflict here. I am unable to reconcile it or explain it because I have to send it to guys who are there 3 days after my deposit. Whereas you are going to give me only 21 days later. So I don't know which is correct. So whatever list you give me, if I send, I suppose that is okay. Then what about the 3 days? See, I'm not saying that section is wrong or rule is wrong. Maybe some of you could have a better idea. Maybe I will look forward to enlightenment from Prabhas Jain or somebody who has some better grasp on this section than me. But what I'm seeing here is a mild conflict here, where you are saying I have to send the notice to members who are there on the register within 3 days from the date of deposit. Okay. But the duty of the board is only to give it to me as on 21st day. So I have to somehow get the list of members who are there 3 days from the date on which I deposited and send it to them. How I will do it, God only knows. See, SIC is again a Latin abbreviation of a Latin term, which means this is how it is printed or this is how it is appearing in the original content. When somebody is reproducing an original content, if there is a mistake, then the guy reproducing it, he wants to say, look here, there is an error here, and that is not me. It's there in the original content itself. So we put SIC. This is a Latin abbreviation, right? Anyway. Dear sir, what is the difference between corporation and what? Corporation and, I think it's not coming on my screen. Dear sir, what is the difference between corporation and, we'll come across it, don't worry. The word corporation, we'll come across it in one of the sections when I will explain to you. So you want to know the difference between corporation and company. Company is incorporated under the Companies Act. Corporation is formed by the Government of India. Life Insurance Corporation. So the Government of India will form a separate law, Act of Parliament. By that Act of Parliament, this will be brought into existence. Both corporation and company are bodies corporate. See, bodies corporate have certain qualities. What is that? Mainly what? Separate legal entity. Perpetual succession. Mainly two. Corporation also will have separate legal entity. But how they are distinguished by the origin. That is, a corporation is formed by a government by passing a special act of parliament. Whereas a company is incorporated under the Companies Act 2013 or 1956, as the case. Yeah. Now, the mode of giving notice. The notice of meeting shall be given by speed post or registered post or through electronic mode to the members. Speed post, registered post or electronic mode. Ordinary post is not allowed. Any accidental omission to give notice to or the non-receipt of such notice by any member shall not invalidate the proceedings of the meeting. Accidental omission. Suppose you have to give a notice to 2,000 people. You made out a list. By inadvertence, 2 fellows' names are left out, holding possibly 1% share capital. Chalo, no problem. Accidental omission. But intentional, then no. For example, a guy holding 25% share capital and he is going to vote against the resolution. Consciously, you don't give notice. Intentional. Now, whether it is accidental or whether it is intentional, who will decide? Matter will go to tribunal. And the tribunal only can decide on this matter. Please understand. See, for this, you should be able to see what happens now. When you go to final, you will study a topic called oppression and mismanagement, where you have the right of members to go to tribunal and complain. At that time, this will become relevant. One of the matters they will give is this. When the other group called an EGM, they left my name out like that. So, the requisition will say, we held a meeting and we passed the resolution. So the majority group will say, correct, he held a meeting, but my name, I was not given notice for that meeting. No, it was accidental. Then we have to decide whether it was accidental or intentional. Finally, the tribunal's decision will be final, whether it is accidental or intentional. So you don't break your head. Sir, how to know if it is accidental? How to know? That depends on the circumstances of case to case. You can't, sitting here, you, teacher and student, we cannot decide. As a teacher, I can only tell you, if it is accidental, it is not relevant. It will not invalidate. But if it is intentional, it will invalidate. Okay. How to know that? Only from the facts. Right. So, we have completed section 100. Now we are moving on to another very important area in meetings. We've seen the two major types of meetings, annual general meeting, extraordinary general meeting. Now we are going to see the rules for conduct of meeting or rules for convening, constituting and conducting a valid meeting. Right? So we'll be talking about notice, we'll be talking about quorum, we'll be talking about proxy, we'll be talking about chairman, we'll be talking about resolution, we'll be talking about business. All this will be taught in today's class and the next class also. Right? So moving on. But before I go there, I have to ask you this question. Who is the company? Now, when you are studying for your foundation course or whatever you call it, CPT or whatever it is, the teacher would have taught you the answer to the question, what is the company? Suppose the question is, what is the company? I will answer. The company is an artificial juridical person having its own separate legal entity, perpetual succession. I'm consciously not giving common seal because it is not compulsory. A company may have, may not have. Okay, if you want to add that also, then you have the whole complete gamut. A company, what is the company? Company is a separate legal entity having an artificial juridical person having separate legal entityship, perpetual succession and common seal. That is answer to what is the company. Now I am asking who is the company. In fact, when you think about it, it is a little bit philosophical also. I know this audience is possibly not ready for what I'm giving, but see, in the Upanishads, there is an Upanishad called Keno Upanishad. Keno Upanishad. In Sanskrit, Kena means by whom. Kena, by whom. Okay, by whom. Kena. The Upanishad is Keno Upanishad. The Upanishad begins with this verse, Keneshitam patati preshitam manaha kena prana pranam kena prana pratama praiti yuktaha keneshitam vacham imam vadanti. The question is, who is behind? Kena, who is behind my words? Who is the person who makes the prana come and my breath come and go in and live? Who is it? Keneshitam patati preshitam manaha. Who is the person who makes my brain work? Very fundamental question. Very philosophical question was asked by our ancient seers, and that Upanishad goes on to answer that you are beyond your body, mind and intellect, and there is something inside which is running everything. Okay, sorry for the philosophical thing. But have you seen? I am asking that question now. Who is the company? Keneshitam pratati preshitam manaha. Who is the person who runs this company? Who is the person who takes the decision? It is not the board of directors. The board of directors are merely management. It is the members of the company who decide. So if the company has done something, it means the members have done it. Now, is it all the members who are the company? All the members? No, sir. Companies Act only wants majority. In some cases, it wants a special majority. So if a majority of a member of a company agree, then it is as if the company has done it. So if it is said the company has done something, it means a majority of its members have decided that it should be done like that. So the answer to the company, who is the company, is the company is a majority of its members. But majority of its members sitting in their house eating puri bhaji, no. Majority of the members have to come for a meeting. Okay. They have to pass a resolution at a validly convened, constituted and conducted meeting. So if the company has to do something, the board has the power to do many things. But beyond the power of the board, the members only can take a call. And that too, a majority of its members passing a resolution at a validly convened, constituted and conducted meeting. 3 words are very important for our current topic. The convening should be valid, that is notice. The constitution should be valid, that is quorum. And the conduct should be valid. We got proxy, chairman, so many things. Any violation of any of these rules, the resolution is invalid. So I hope I communicated something to you, or I don't know if it's what I communicated was even relevant to many of you. But this is why I love this topic. This is where corporate decisions are taken. Okay, this is where corporate democracy works. Right? So the company is a majority of its members passing a resolution at a validly convened, constituted and conducted meeting. The product of your meeting is a validly passed resolution. That's all. No other purpose. So which means if all the members are in alignment, the meeting can be concluded in 10 minutes. All I need to do is get everybody there. All of them agree to the resolution. Matter over here. So long as it is validly convened, validly constituted and validly conducted. So convening the notice. We are going to see, first you are going to see ordinary notice. In the next class we will see special notice. Who gives special notice, etc. We will see later. Also, at the meeting, you should transact business. It's also called agenda. 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 Agenda means the matters which are to be transacted at the meeting. Do we serially numbered? Okay. Agenda. This is also known as business. The agenda is also known as business. The business to be transacted at the meeting. Business could be special or ordinary. We'll talk about that a little later. Okay, this is convening. So when you are convening the meeting, the notice, if the meeting is going to transact a special business, the notice should give information. Only then it is valid. So valid notice should be given within the due date. We are going to see those rules next. What is the number of days for giving a notice? What should be the content of the notice? What are the additional things? So that's why I've included business in convening, because if you are convening special business, the notice calling the meeting should give all the relevant information. If it does not give the information, it is not valid. See, think about it. The whole point of teaching you this subject is at any time, the validity of a resolution may be questioned by saying one of the ingredients is missing. If you are able to do that, you will question the validity of the act itself. Suppose the company has borrowed money by passing an invalid resolution, then the borrowing itself is ultra-vires the powers of the board. So the board of directors can be penalized for it. It is within, see, the company can ratify it, that's different. But the board has exceeded. If you are able to show that the resolution was invalidly passed, which is why every one of these rules have to be carefully understood. Right? We are also going to see quorum. Quorum is the minimum number of persons required for a valid meeting. Minimum number of persons required for a valid meeting. Then proxy. Okay. A person who attends the meeting on behalf of a member, who votes on behalf of a member. Right? Of course, business, the matters to be transacted at the meeting. When everything is validly done, validly convened, validly constituted, validly conducted, you get a valid resolution, which you then use. The board of directors is now empowered to do it. They do it. Validly done. Okay. So this is the whole point. Many times, legal questions will revolve around whether the act is valid. You might have to go back to convening, constituting, conducting. If you are able to show one hole there, then whole thing falls. Which is why you have to be very careful while calling a meeting, conducting a meeting, etc., keeping in mind the rules we are going to see. So first, section 101, read with rule 17, we are talking about notice of meeting. Right? So, length of notice, not less than 21 clear days notice. Not less than 21 clear days notice. What is this clear days here? So I go out and see the sky. Today in Chennai, it so happens the sky is very clear, sunny day, no clouds. Can I say that's a clear day? So about 1 month ago in mid-May, we had rains here. So the sky was cloudy. It was not a clear day. So should I ensure that there are 21 clear days like that? Sorry, no. 21 clear days means you should not include the date on which the notice is served and the date of meeting. The date on which the notice is served and the date of meeting are excluded for sending the notice. Right? A company cannot curtail the requirement of clear days through its articles. Little bit later, you will find you can have shorter notice, but that you cannot do through the articles. Every time you want to give shorter notice, you have to get the consent of the members who are entitled to attend. Every time. Articles cannot say less than 21 days, no, or clear days not needed, no. This is statutory. You cannot violate the statute. Okay. Now, one more small point you would notice here. Normally, it is 21 days for other companies, but for a Section 8 company, it is 14 days. So for a Section 8 company, you don't have to give 21 days, clear days notice. You can give 14 clear days notice. Okay, 21 to be read as 14 for a Section 8 company. Again, in the section, in the original section, you will find not less than clear 21 days notice. Not less than clear 21 days notice. Even our own institute material, study material, I am seeing clear days, 21 clear days. Because that is the correct way of writing it. I don't know who drafted that section. 21, not less than clear 21 days notice. Seriously, not correct. Before we move on, Rekha is asking about 3 days. See, the requisitionists have to give a notice, right? The board has not called the meeting. So, I am the requisitionist. We are the requisitionists. Now, we have to call the meeting, right? So, I have to send the notice. Now you saw the notice. I have to send that notice. Now, to whom should I send it? To those members whose names appear in the register of members within 3 days. Within means after. So, I deposit the requisition. Then within 3 days, whosoever name appears, I have to send the notice. So, that is why, see, no problem. But while directing the board, they are saying you can give after 21 days. I seriously, there seems to be a disconnect here is what I am trying to say. But from the exam point of view, 3 days here. Be clear. So, if the requisition was deposited today, then today, tomorrow, day after, within the 3 days, whose members whose names appear in the register have to be given a notice. Okay, that is the point. That's a good question. Do requisitionists bear all costs of EGM? Yes. Okay, they have to bear all the costs of EGM. The company will not sponsor it, but in some cases they can get it back. Okay, but that is not normally the requisitionists have to bear the cost of. No, I don't. I think they can get it reimbursed. Sorry. Maybe I've left it out in this. Shall I check up and get back to you? I have a feeling, no, it's a good question, Himanshu. I don't know if it is there. Can I check up and get back to you? Give me just, during the break, I'll check up. You're right. The company has to bear the cost of the company has to bear. The requisitionists don't have to bear. The company has to bear the cost of the requisitionist meeting. I'll check it up, but because it is the duty of the board to call. He has failed to call it. Now we are calling it. So whatever cost I am incurring, any reasonable cost for conducting the meeting needs to be reimbursed to the requisitionist by the company. Good question. Thank you, sir. Sorry. If it is left out here, I will add it there. Okay. Chalo. Now, good question. So, meaning of clear days we have seen. Very importantly, there is in the incorporation rules, there is a very important point which is relevant here. That is why we are covering it here. See, though incorporation you learned it earlier, this rule is relevant only now. That's why we are giving it here. Yeah. Thank you. Sorry, it is my mistake. I should have included it here. They will be reimbursed. Okay. Pooja, again, I don't want you to use given in the book. You should say given in the section. Okay, don't mistake me. Whether it is study material or textbook, you have to cross that barrier. Check up the section. What does it say? Or the rule. Yeah, it is there in the section. And therefore, it is given in our material. Okay. All I want you to is get out of that college behavior thought. Huh? Book. No. From now on, you should go to the original sources, the section, the rules, etc. And be thorough with them. Correct. You people are all extremely knowledgeable on this subject. I don't know why I am even at all teaching you. Company will bear deducted from directors who is responsible for not conducting. Exactly. It is the duty of the directors to conduct it, and so they should bear the cost. The company should not bear the cost of the failure of the directors. Now, I don't know what happened. I don't know how it missed out. I'll check it out and I will add it to the notes before I send it to you. I will add it to the notes. Okay. Now, coming to Rule 35(6), where a notice of general meeting is sent by post, it shall be deemed to be served at the expiration of 48 hours after the letter containing the same is posted. Where a notice of a general meeting is sent by post, it shall be deemed to be served at the expiration of 48 hours after the letter containing the same is posted. So, whether it reached or not is not my criteria. I have to send it by ordinary post. And once I send it by post, it shall be deemed to be served at the expiration of 48 hours. Right? Now, this section is there, this rule is there, but what we have to remember later on when we get into the voting by electronic mode, etc., listed companies can give notice in electronic form, in which case it will be served instantaneously. So either way, the notice, the date on which the notice is served and the date of the meeting are excluded. If you are sending it by ordinary post, there is a deeming provision which says that when he received it is not my problem. If I have sent it by post, then he is deemed to have received it at the expiration of 48 hours from the time of posting. Which is why whenever we post the AGM notice or EGM notice, we get something called certificate of posting. The postal department will give it to you. They will take the cover, contents unknown and all. They'll say there will be a list of people who are to whom it is being sent. So that list will be given to the post office, and the post office will put a chop on every page of that list and sign. And finally, they'll give a certificate saying this was no guarantee of delivery. The post office is not guaranteeing delivery, but they are saying this was posted at such and such a time at this post office. It's an important proof for me tomorrow, because once I have put it in course of post, it is deemed to have been delivered within 48 hours. One. Of course, if you are a listed company, you need not send by post at all. A listed company can send the notices by email. In which case, that email will be sent to the email ID given at the time of application, or nowadays, listed companies straight away, they will take the email from the depository participant, DP. So whatever email ID you have given to your DP, which is recorded with the depository, that is the official email for all this. So you have to be very careful. Whatever email ID you have given there, see to it that you will be using it regularly. Because all notifications, all notices, everything will come only to that ID. Okay, to that ID. I have given my ID with my DP, to that ID only I'll get all my notes. So for a listed company, notices calling general meeting can be sent by email. There is that. And it will be, in which case, delivery is instantaneous, right? If I send the email today, maximum half an hour, it's supposed to come to me. So whatever it is, the date of service is to be ignored. Date of meeting is to be excluded. The gap in between should not be less than 21 days. Right? Mantanjali, your doubt is not clear to me as usual. Not less than is wrong or right means what you are saying. Where? In which context you are telling not less than? May want to clarify to me. Not less than 21 days. Yeah, not less than. It should be more than 21 clear days. It should not be less than 21 days. Okay. See here, in this diagram, this gap should not be less than 21 days. This should be minimum 21 days. It can be more, but it should not be less than. So, if that is your doubt, I have answered it. Okay, Kiranji, if this is what you think, salute. I'm not going to react because I don't know what auditors and all. See, we are talking only about shareholders. Don't bring auditors and all into this. And shareholders will never get a notice. See, you might purchase the share. If your name is not in the register of members, how I can give a notice? So shareholders will never get a notice. Auditors, of course. Okay. Auditors, of course. Auditors are, as you rightly say, auditors are entitled to notice of all general meetings. You are absolutely correct. But, okay, whatever. Anyway, read it again. I appreciate your willingness and ability to give meaning and life to the enactment rather than reduce it to futility. My guru always used to say that whenever we read a section, we should give life and soul to it. So, chalo. Now, moving on, I've given a small numerical problem, which is very easy. The directors of Signi 21 Mines Limited posted the notice for an AGM on July 25th. The meeting was scheduled on August 14. Is this valid? You have to count. See, assuming that the notice is posted on 25th July. So 26th, 27th. So this is 25. This is 25. So 48 hours later. So if I posted it at 10 a.m. on 25th, so 10 a.m. 26th, 10 a.m. 27th. So on, it is deemed to have been served before 10 a.m. 27th. So 25, 26. So 27 should be ignored. 27 should be ignored. And then you have to start counting 21 days. I will count. 28, 29, 30. Because it's July 31. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So 17th is the 21st day. So any day after 17th, 18th onwards, you can have the meeting. If you have it less than that, if you have it say on 14th, then since the posting date is 25th July, if the meeting date is 14th, then the notice period will be less than 21 clear days. Therefore, the meeting is not valid. Okay. The meeting should have been scheduled either on 18th or later. Any day after 17th. Okay. Correct. Just I am giving this example to help you understand. It's fairly simple. Similar example, similar question could be asked in the exam also. See, suppose it is email, then if it is mailed on 25th, then 25th will be ignored. That's all. You cannot take 25th into account. Can a meeting be convened by giving shorter notice? Yes. For certain emergencies, you might want to call an EGM by giving shorter notice or even an AGM. No problem. A general meeting may be called after giving shorter notice if consent in writing or by electronic mode is accorded by the requisite number of members as detailed below. So you have to send before you call the meeting, you have to send a letter to all of them. Or what you can do is, suppose you want to call a meeting less than 21 days, no problem. You send the notice. Along with that, you send a, letter, or you give a form wherein you say, the member should say, I hereby consent to the giving of shorter notice. He has to sign it and send it back to you. Okay, in those days, we used to send it with a self-addressed stamp envelope. Or now what you can do, you can send it by email and then you can give him a form, e-form to submit. You can give him a Google form or some form, whatever form that you are using, which he will submit electronically. Simply, you will ask him, this notice is being given less than 21 days. This is to inform you. You can give your consent. Please give your consent by clicking on yes. You can give two options, yes, no. So his registered folio number will come, name will come. Then I hereby give my consent to the shorter notice. Then two boxes will be there. Yes, no. So if he clicks on yes, consent. No, no. Then everything will be collected and we will know. Now, so mechanics of it I have told you. But what is the number? For giving shorter notice, not less than 95% of the members entitled to vote thereat should agree. Entitled to vote thereat should agree. Not less than 95%. See, 5% don't reply, it's okay, but 95%. Okay. For an EGM, in the case of a company having share capital, majority number of members entitled to vote and who represent not less than 95% of such part of the paid up share capital of the company as gives the right to vote at the meeting. Okay. In the case of a company having share capital, majority of in number of members entitled to vote. So the majority guy should also represent 95%. Right? So they've added a majority in number clause. Suppose the company has 6 members. Right? 6 members. 4 of them together hold 95%. The remaining hold less than 90. There is the remaining 5%. Then these 4 guys who are holding not less than 95% can agree to a shorter notice and we can hold it. Okay, 95%, but here majority number. See, suppose there are 6 people, 4 are holding 95%, but only 3 agree, 3 do not. Then majority number is not there. Okay. Even if you are having 95%, the 3 guys are having 95%, they cannot agree because they are not a majority in number. So for an EGM, they put an additional condition of majority in number. Merely holding 95% of the, for an AGM, 95% of the members have to agree. Here, majority in number have to agree, but they should hold share capital representing not 95%. Case of not having share capital, members having not less than 95% of the total voting power. Total voting power. Do you notice this is the second section which talks about requisite number of members. So try to remember. Actually, only 2 sections are there. 100 we saw this. That's all. Because 111 will again refer you back to 100. Where any member of a company is entitled to vote only on some resolution or resolutions to be moved at a meeting and not on the others, those members shall be taken into account for the purpose only in respect of those matters where they are entitled. See, this is simple game. Preference shareholders are also attending. They may not be entitled to vote on all matters. Right? That's the only example I can give. Because if it is equity, then everybody is entitled to vote on all. Only in preference shareholder case, what could happen? There could be some matters where he is entitled to vote, some matters where he is not entitled to vote. In those cases, for counting this number of members, we have to count separately. For each item of agenda, we have to count. Right? So, preference will be included for those where they are there. Got it? So, for counting this 95, we have to count separately for each item of agenda. Valid notice must state the day, date, or place of the meeting. Day, Sunday, the 19th of June, 2022 at 10 a.m. at the so-and-so place, registered office of the company. Who is entitled to receive? We already had a student who gave us the hint. Ms. Kiran, she said, yeah, every member of the company, legal representative of any deceased member, or the assignee of an insolvent member. Please note, who is entitled to receive? Only member. I want to distinguish between member and shareholder very clearly. I cannot give notice to shareholders because I don't know who they are, yeah. But member I know. Member is a person whose name is entered in the register of members. A member is a person who applies in writing to become a member and whose name is entered in the register of members or whose name is updated in the records of a depository. I have no problem in giving notice to members. How can I give notice to shareholder? Yeah, you acquired the share, you didn't tell me, how will I know? Now it's quite possible that a man may be a member, but he may not be a shareholder. He might have sold the share. Still, he will get the notice. The shareholder will not get the notice. Okay, so there is, since I like Kiran's answer. She is trying to give some explanation for the apparent conflict in this rule. But while doing so, she has used the word rest other members. like shareholders and all that. Shareholders not. Members only are entitled. Also, legal representative of any deceased member. Deceased means dead. Person who was dead is called deceased. Don't confuse with D-I-S-E-A-S-E-D, deceased. Person who is having some disease, person who is not well is called deceased. So this is English is unfortunately, same pronunciation, deceased. But the D-E-C-E-A, C means to stop. Deceased means man who has stopped, man who is no more. Person who is dead is called deceased. Of course, if the person is deceased, he will become deceased. So once a person dies, his estate, his assets will be called estate. That estate will be managed by his legal representative, legal heir or legal representative. So that person is entitled to notice. Okay, Mr. A is a member, A dies. Then the legal representative informs the company, legal heir informs the company. Then, because otherwise I cannot give you, please note, if the member is deceased and I don't have notice, I cannot give. But if I have notice of death and the legal representative has said, I am the legal representative, he has given proof, then notice of meeting should be given to the legal representative. In the case of an insolvent member, that is a person who has become insolvent, his shares will vest with the assignee or receiver. So the assignee is entitled to a notice. Okay. Of course, the member is not entitled. Only the assignee will be given. The auditor or auditors of the company are entitled to notice. They are entitled to receive notice of all general meetings. Please note, all general meetings. In fact, there is a question in the exam. There is a question in the exam in those days, I remember, where they will say, and this is a question which could come in auditors also, where the company secretary will not serve the notice for EGM on the auditor. When the auditor asks for the notice, he will say, you are the auditor and I have to give you notice only for AGM where the accounts are to be considered. Is that right? No. The company secretary is wrong. Auditor is entitled to notice for all general meetings. Later on when you come to auditor, we'll talk about it. Okay, about his duty, the auditor's duty. But he is entitled to notice or she is entitled to notice or they are entitled to notice of all general meetings. Every director of the company is also entitled to notice of the general meeting. But please remember, he cannot vote. Directors do not have any vote. But if he is a member and a director, please note, if he is a member and a director, he can vote as a member. As a director, he has no vote. As a member, depending on number of shares, he can vote. But this is very peculiar because earlier, notice of general meetings to directors was never considered. The reason is simple. Who is issuing the notice? The board. How he will not have notice. But now they are saying you have to give a notice to every director also. Even though he may not have attended the board meeting at which the notice was sent. Notice is pretty lengthy, right? Seems to be going on and on. Okay. Member and shareholder are not the same. I have been giving the difference so many times. Still you are not able to understand. Member and shareholder are synonyms, but not same. Synonym is different from same. They are synonyms. Sometimes they are used interchangeably. But Anusha ji, did you hear me giving the definition of a member? So, please, if you understand it, I am happy. If you still think members and shareholders are same, salute to you. There's a slight difference. I cannot give a break. You take break if you want. If you want break, take break. I'm not forcing you and making you sit here. Okay, I will give break. I will give a break, but not at your convenience. Okay, I will give a break, but not at your convenience. So please do not put in future. Please, students should not put comment like this. Dear sir, I want break. If you want a break, nobody is holding you. You go to the bathroom and come. Who is preventing you? Or have a cup of tea and come. You are sitting in your house. Okay. In case you are missing some portion of my lecture, no problem. Download the video and see it. Okay. But don't tell me what to do. Right? I think we have gone through this already in an earlier class. Don't put a comment like that again. No, none of you. I will give a break, or if I decide not to give a break, that is my decision. Later on, you will be seeing in these meetings, the chairman of the meeting has the power to control the meeting. Like that, the faculty has the power to control this class. I decide what is done, what is not done. I will take your concurrence in principle, but think about it. Because my interest is to complete the topic. Okay, not your convenience. Boss, I also want to go to the washroom now, yeah. I'm controlling myself and conducting this class. Can you imagine? You can't control yourself, is it? For another 10-15 minutes. And you're going to write the CA exam. Huh? Please, don't put it. Yeah, Aman says, I remember very well. I mean, why? Because I'm telling you again and again, don't disturb the class like this. You don't want, if you want a break, go. Don't put a comment like that, please. You please take a break. Go and come. If it's a normal class, somebody wants to go to the washroom, I'm not going to prevent him from going. If he walks out of the room, I'll say, go and come. That's all. Okay. Members and subscribers are not the same, ma'am. Subscribers are those people who sign the memorandum. After that, there could be people who apply in writing. See, can you remember this definition? Shall I repeat it one more time? All of you, concentrate. Member is a person who, of course, a subscriber to the memorandum is a member. In addition to that, every person, listen, subscriber to the memorandum is member. Every person who applies in writing to become a member and whose name is entered in the register of members is a member or is updated in the records of a depository. Only member, they are members. So subscribers to memorandum is one kind of member. Also, any person who applies in. So the two criteria should be satisfied. For a shareholder, in some cases, he might not have applied in writing. He might not have sent in the request for becoming a member. So his name is not updated in the register of members. So he is not a member, but he is a shareholder. So in this section, the right to receive the notice is available only to member, not to shareholder. And logically also, how can I send it to shareholders? Yeah, a guy might have purchased the share in the market, but the depository record might not be updated. So how will I know he is a member? On the day when I'm sending notice, I can go only by my register of members. So that is why I'm telling, please be careful. This is very important. If you confuse this, and then you might, in the exam, if you write it, you will be wrong. If you still think shareholder and member are the same and you use them synonymously in sections, you might be wrong. So in every section, please see, are they using the word shareholder or are they using the word member? Here they are using the word member. Therefore, you also should use member, right? There is a subtle difference there. Okay, any accidental omission to give notice or non-receipt, etc., who is entitled to such notice will not invalidate. We already saw it in requisition CGM. But again and again, the criteria should be accidental. It's actually called a Ganga clause because in spite of a mistake, the Ganga clause purifies the mistake. Like the Ganga river purifies, the Ganga clause purifies. There is an omission, but it is accidental. It will not invalidate the meeting, provided you show that the omission to give notice is accidental. Right. Now, 101, this section shall not apply to a private company. So, private company can have its own provision in its articles. It can have its own rules for notice. So, a private company by its articles may provide otherwise. If so, it won't apply. Okay. Also, this 101 shall not apply to a specified IFSC public company. Private companies are already covered. So, that's why we are not giving private company here. IFSC private company is a private company. Private companies are anyway exempted. They can have their own provision in the articles. For example, less than 21 days, etc., etc. By articles, there should be a provision in the articles, right? Also, they are saying specified in respective sections, like 101 is a single section. I don't know what respective sections, but in this section, see, in a future section, if you see private company is exempted, then that will apply. 101 provision will apply to a private company only if the articles do not provide otherwise. Okay, be careful. Suppose a private company, the articles of a private company is silent. There is no provision for notice. Then 101 will apply. Suppose a private company has provided that 101 will apply to us, but notice can be given within less than 7 days, not less than 7 days before. Then to that extent, the articles will prevail over 101. But all other provisions of 101 will apply. Okay. The company can give the notice through electronic mode. Listed companies compulsorily by electronic mode. So it should be sent through authorized and secured computer program. You will come across electronic mode again and again definition. Yeah, I will not give it again. Once you learn it, any communication sent by a company through its authorized and secured computer program, which is capable of producing confirmation and keeping a record of such communication addressed to the person entitled to receive such communication at the last electronic mail address provided by the member. So any accepted email program is good enough. I mean, ideally you will use one of the servers, either Google or Microsoft or whatever, and use it to send whatever, so long as it's protected. Okay. But remember, email is not fully asymptomatically protected. There's no digital signature. So email can be tampered, but to a great extent, it is safe. Especially, to a great extent, it is safe. A notice may be sent through email as a text or as an attachment to email, or a notification providing electronic link or uniform resource locator. See, what you can do is, you need not send the notice. You can send a link, and once he clicks on the link, he can go to your website URL and he can read the notice there. If he wants, he can download it himself. That is also possible. See, that's only technology, how you use it. They have only given you the facility. The email shall be addressed to the person entitled to receive that email as per the records of the company. Okay. Now, the company should provide an advanced opportunity once in a financial year to register his email address. So, listed company, clearly depository participant email ID given to the DP only will be used. The company will not collect your email address. They will only take it from the DP. So, NSDL or CDSL, through your DP, you are given an email now. That email will only be there. But unlisted companies, public, private, etc., they can collect the email ID, and once in a year, they should ask them to give your email ID. This facility is available only to those members who have not got their email ID recorded. So, any new member who's coming in whose email ID is not with you, you have to give him an opportunity to register his email address. Okay. If you are a regular existing member, then you can update it and give a fresh email address whenever you want. Okay. But the opportunity should be given at least once in a financial year. Friends, theoretically, this is applicable only to private company and unlisted public companies and private companies. Listed companies will automatically send a notice only to the email address given to the depository participant, DP, or which is now recorded with the depository. The subject line in the email shall state the name of the company, notice of the type of meeting, place, etc. So that by seeing the subject itself, this man should be aware of the importance of the notice. Notice shall be placed simultaneously on the website of the company and on the website notified by central government. As of now, they are not notified, but many listed companies put up the notice on NSE website also. NSE or BSE, the stock exchange, and on SEBI website also they put it up. Listed companies. Unlisted companies, as of now, if they have a website, they can put it there. So, a general meeting has to be called by the board. An individual director does not have an authority to call a general meeting. Any notice of general meeting given without the sanction of the board is invalid. However, the same can be ratified by the board. That is, the MD alone cannot issue the notice. But suppose he does it in an emergency, the board has to ratify. Subsequently, they have to give their consent to that clearing. But otherwise, you have to call a board meeting to call a general meeting. Individual director does not have the authority to call a general meeting. Of course, if it is done, the board can ratify. Yes, we move on to business today. The two types of business and all that. Now, I will give a small break. Time is 8:29 or 8:30. I will give a small break and let me quickly take up the questions so that I can call a break. Every shareholder is a member, but every member is not a shareholder. Agreed. I think we have I have explained this ad nauseum. I have explained this concept to you clearly. Okay. If you still think both are synonymous, you are wrong. Yeah, you can give comment like this. Every shareholder is a member, but every member is not a shareholder. Yeah. They are intersecting sets. Some people could be shareholders, but not members. Some could be members, but not shareholders. Some could be both member and shareholder. Okay. I remember having discussed this when we spoke about incorporation of companies. If private company AO is silent for 101, it is applicable. Then later the AO can be amended. Do it, yeah, no problem. Pass a special resolution and amend it. That's all. So you want to include something which is against 101? Yes. Please amend your articles. Amending articles only requires special resolution. Pass a special resolution. Amend. That's all. Thereafter that. Depository already explained. Please download the video for share capital and debentures, wherein dematerialization was discussed. Dematerialization. I discussed dematerialization. At that time, depository has been explained. So kindly download that video and watch it. Which title? You will have to tell me which slide. I will definitely correct it. Topic mentioned in the title is wrong. You will have to tell me which one. Okay. If you made a note of the slide number, you tell me. Otherwise, I'll see. We are in notice of meeting. So mode of sending the notice. Yeah, maybe, okay, if you feel this is wrong, chalo, I will change it. No problem. Yeah, Sanskar, I'm able to read the queries. I'm answering your query now. Which title you want me to update? Seriously not understanding which title. Title of the video is PGBP, but the actual, I don't know, boss. You are talking something very technical. I'm not able to understand. Sorry, my slide only I can do something about it. The title of the video, sorry, ma, I'm not doing it. Okay. You got it? Please inform the tech support. Okay. A small break for 5 to 10 minutes. 8:32, maximum 8:40. Not later than that. We will start the class. Now go for break. Okay. Sir, break, sir. Welcome back from your well-deserved break. Right? Now let's quickly plunge into the topic. In the meantime, I have reported Mr. Sanskar's point and the title should have been changed. In case it's not changed, kindly refresh and it will be changed. Anyway, so hope you are happy now. Slide notes assignment will be done on Saturday, G. Please wait till Saturday. Inshallah, on that day, when the topic is completed, I will upload this PowerPoint and also assignment on Saturday. Okay? Kindly control yourself till Saturday. Yeah, Rekha is asking this question. The term business in this topic of notice means agenda. Yes, business means the matters or agenda to be transacted at the meeting. So what are you going to do at that meeting? That is called business. It's also known as agenda. Yes, agenda. Agenda is again a Latin term which means matters to be taken up or discussed. Right? Now, the word business is not defined in the Act. I'm only giving you my generic meaning of it. But they are very clear that business is of two types. You got ordinary business and you got special business. Ordinary business, as the name implies, is well known. We know what it is. So, at an AGM, at an annual general meeting, the four matters given here are ordinary business. The following matters are ordinary business if transacted at an AGM. What are they? The consideration of financial statements and the reports of the board and auditors, etc. So, financial statement, director's report, auditor's report, all that consideration and passing. Say they don't say passing, they say consideration, because whether to pass or not is the decision of the members. You cannot force them and say you have to pass. So the agenda is consideration. After considering, somebody will propose. I propose that the financial statement, director's report and auditor's report thereon be passed. Then all those in favor, then only it's passed. Till then it is only being considered. So the consideration of the financials. The declaration of a dividend or any dividend. Yes. Again, it is not compulsory. Declaration of dividend is at the option of the board. It is the board which decides whether to declare a dividend or not. But if they do that, and that is, they have to then bring it as an agenda to the members. Because the dividend is recommended by the board and declared by the members, shareholders at the general meeting. When declaration of dividend is done by the members at an AGM, it is an ordinary business. The appointment of directors in the place of those retiring. See, this topic is linked to your final syllabus. There, when you come to final, we'll talk to you about directors, appointment of directors and all that. There, we will tell you that at every AGM, 2/3 of the directors are liable to retire by rotation. 1/3 of the 2/3 will retire. So that's called retiring director. Compulsorily retirement. So when directors are retiring and they are being reappointed, that is an ordinary business. When directors are retiring and they are being reappointed, retiring directors are appointed, or if you either they are reappointed or you are appointing somebody in the place of the retiring director, that is ordinary business. Suppose you are appointing a new director at that AGM, that is not ordinary business, that is special business. Already A, B, C, D are directors, right? Mr. B is retiring at the next AGM and he is to be reappointed, ordinary business, no problem. Or Mr. B is retiring at the next AGM, coming AGM, B is retiring, but you are appointing F in the place of B. That is also ordinary because B is retiring. In his place only you are putting F. Suppose, in addition to this ordinary business, you are also going to appoint a new person called E. Mr. E is a new person, then that is a special business. Only appointment of directors in the place of those retiring is an ordinary business. If done at an AGM, the appointment of and the fixing of the remuneration of auditors, the appointment of and fixing of the remuneration of the auditors. Sorry, it's my mistake. business. Okay. It's okay. Okay. I'll correct it later. Right now, let's the appointment of and the fixing of the remuneration of auditors. Right now, so these four matters, if transacted at an AGM, ordinary business. All other business at an AGM. I told you now, appointing a new director, anything other than these four at an AGM is a special business. And all business at any other meeting shall be deemed to be special business. All other business at an AGM and any business, all business at any other meeting shall be deemed to be special business. Now, if it is special, see, think about it. The logic is simple. Suppose it is a special business. Suppose it is a special business. The members should know what it is. See, as the name implies, ordinary business is routine, needs no explanation. Hey, accounts, adopting accounts, appointing, finding the remuneration of auditors, appointing persons in the place of those retiring as directors, dividend. Members know about it. Yeah, you don't have to give them some reason why we are doing it. But any other matter, the member may have a doubt. Hey, what is it all about? I don't understand. For example, the borrowing capacity of the directors is the limit is reached. The directors cannot borrow in excess of paid up capital and free reserves. Or forget that. Something from your own area, I'll tell. The company wants to go for a buyback. Special resolution has to be passed. Or the company wants to increase the authorized capital. Memorandum has to be amended. Special resolution has to be passed. All these are special business. Now, I'm an ordinary man. I'm not expert in a company law like you. I'm Aam Aadmi. I'm getting a notice saying to increase the authorized capital of the company from 5 crores to 50 crores. I don't understand, why are you doing it? What is the need, etc. So, in order to educate ordinary people like me, a statement setting out the following material facts concerning each item of special business to be transacted at a general meeting shall be annexed. Annexed means becomes a part of the notice. Later on, when we come to accounts and auditors, accounts, I will distinguish again. Documents which are annexed are part of the document. Documents which are attached are not part of the document. Okay, the notes or accounts is annexed. The profit and loss account is annexed to the balance sheet. The notes or accounts are annexed to the balance sheet. They form part and parcel of the balance sheet, the financial statements. Got it? So the word annex means that that document becomes part of the original document. So when I am annexing it to the notice, it is part of the notice. Whereas something which is attached is slight difference. If you want to give an example, I can say annex means staple, attach means paper clip. When I'm only putting a clip, it is attached. When I'm stapling, it is annexed. That means it's part of this document. Okay. So it has to be annexed to the notice calling such meeting. Both are again synonymous. Annexing and attaching both are synonymous, making it a part of. But when you annex it, it becomes a part of the original document. Whereas attachment will just go along with the original document. Okay. Now, see, when I'm teaching this to you now, you should remember it when I come to accounts. Smart student will remember what I'm saying now. At the time when I come to that topic, I will again ask you, hey, remember? See, annex. These are all annexed. That is attached. The auditor's report is attached. The board of directors report is attached. Like that. Okay. So, whenever there's a special business, the statement should be annexed to the notice. What is to be included there? See, I am a common man here. You are all highly brilliant chartered accountants. Tell me, you will have to explain to me in my words to understand what you are doing. So, the nature of concern or interest, financial or otherwise, if any, in respect of each item. Suppose any manager or director is interested in the matter, you have to give the nature of concern. If any key managerial personnel is interested, then you have to give the nature of interest. If any relatives of these two fellows are there, that also you have to give in the nature of concern or interest. If none of them is interested, then you should say no director, manager, if any. If there is no manager, forget it. no director or other key managerial personnel of the company is interested in the matter. That's all. But if he's interested, I'll give a simple example. The company is going to purchase a land. You want to pass a resolution. Now the owner of the land is the managing director. That has to be disclosed. The managing director of the company is the owner of the land. Any other, this A part is interest. If no person is interested, ideally nothing. It can be, see, they can be interested. Nothing wrong. They can be interested, but that has to be disclosed. Please understand. Nothing wrong if a director is interested in the transaction. There are certain rules for it. If you go by along with that, it's okay. Main point is disclosure. The member passing the resolution should know that this land belongs to the MD. Then automatically he'll start asking the valid questions. Like, for example, what is the valuation? How much are we paying? How is he getting it? Is he taking it in money or shares? All that has to be given as any other information and facts that may enable the members to understand the meaning, scope, and implications of the items of business and to take decision thereon. So, even if nobody is interested, you have to give complete information. This is a very, very tricky section because suppose the information is not given properly, it is given misleadingly, that could invalidate the meeting. Very careful while drafting. In fact, your knowledge of English should be so good that you should be able to draft it in such a way that you give him some information, but you don't give him everything like that. Or you give him the whole information. Complete disclosure. If you go to any Tata Group company or Infosys, any special business is there, maybe take it as a sort of homework. Go to the net, download the general meeting notice of Infosys. See any special business is being done. See how they have given a explanatory statement and how they have given the statement for a special business. I suggest TCS and Infosys because they are very transparent companies. Like that. Therefore, you can go. In South India, you have TVS Group, very transparent. TI Group, very transparent group. Such companies will give very clear information. Or Sundaram Finance, very clear information will be given. Now, the basic principle is members should be enabled to take an informed decision. With respect to any special business, the members should be enabled to take an informed decision. So his decision should not be out of ignorance. He should be clear. MD is interested in MD is the interested. He is the owner of the property. Property is being sold at 10,000 rupees per square feet. The property is in somewhere, wherever it is, Viman Nagar, Pune. Okay, whatever. Now, so I'm residing in Pune or in Mumbai. I can easily verify what is the going rate for a property office complex in Viman Nagar and say, okay, chalo, 10,000 is good enough, yeah. Even it's an arm's length transaction, then I will approve it. But suppose I feel what nonsense, 10,000 per square feet, it should be more than that. Then I will not vote in favor. So if sufficient number of members don't vote, the motion will be defeated. That is all. So this is how corporate democracy works, right? Where any business to be transacted at an AGM or EGM, special business, will involve or it affects any other company, then the extent of shareholding or interest in that other company of every promoter, director, manager, if any, and key managerial personnel of the first mentioned company should be disclosed, provided the extent of such shareholding is not less than 2% of the paid up share capital of that company. We put it very clearly. We are going to purchase a land. The land belongs to ABC Private Limited, body corporate, any other company. ABC Private Limited. Land is owned by ABC Private Limited. The MD of this company is holding 15% shares in that company. That has to be disclosed. But if the extent of such shareholding is not less than 2%, if it is less than 2%, then no need. But if it is not less than 2%, 2% above, then you have to disclose. Okay? Idea again is transparency. See, MD is the owner of shares there. It's an interested transaction. Instead of selling his own land, he is selling the land belonging to a company in which he is having 25% stake, or his relatives may be holding. But here they are not mentioned relative. They are only talking about the extent of shareholding interest of every promoter, director, manager. Whereas here they are taking the nature of concern or interest, financial or otherwise. Everything is mentioned here. For example, the director may not be holding, his relative will be holding. Right. So that has to be disclosed. Any item of business refers to any document. For example, in our example, the purchase of the land will be happening through an agreement of sale agreement, entered into between the company and the managing director, or the company and that other company which is selling the land. Then that document can be inspected by a member. You should mention the time and place where the document can be inspected, so that any member can come and have a look at the document to see if it is fair, it is in good faith. Okay. All this is based on transparency. In case such a disclosure is not made, then any benefit may accrue to the promoter, director, manager, or other key managerial personnel or their relatives as a result of non-disclosure or insufficient disclosure. Then I'll give a simple example. The Viman Nagar property actual square feet rate, okay, 10,000 maybe in Viman Nagar. I'm being a little too optimistic. Let's say 6,000 rupees per square feet, beautifully constructed property. Normal rate is 6,000 rupees per square feet. But this guy is buying it. The guy is selling it to the company. 6,000 rupees per square feet. He is selling it at 8,000 rupees. So the fair market value of the property is 6,000 rupees per square feet into the rate, number of square feet. But he is selling it to us at 8,000 rupees per square feet. That means 2,000 extra per square feet is getting is a benefit. Now, if it is not properly disclosed, for example, instead of saying 8,000 rupees per square feet, they say at the going market rate. What is the going market rate? Yeah, we don't know. So it may not be 8,000. We don't know. You're not. So there is insufficient disclosure. Or if the fact that he is the owner is not even mentioned, there is a non-disclosure. Then, or the rate is not mentioned at all. The property belongs to the managing director and we are going to purchase it. That's all. What is the rate? It's not mentioned. Whatever it is, because of that, I'm not able to take an informed decision. But even if the majority shareholders have agreed, still, if there is a non-disclosure and there is a benefit to the promoter, director, manager, or other KMP, then such benefit will be held by them in trust for the company. And they are liable to compensate the company to the extent of the benefit received by him. Later on, when there is a case before the tribunal, one of the prayers will give is the land was sold unreasonable price to the company. He made a profit of 2,000 rupees per square feet. As per section 102(4), he should be holding it in trust for the company. And now he has to compensate the company, ask him to pay. So, tribunal will direct the person to pay. But the power to do that is coming out of 102(4). Any default in complying with 102, any default other than benefit, any default, not giving properly, insufficient, non-disclosure, there may not be any benefit even then. Or there may be a benefit. Who is liable? Every promoter, director, manager, or other KMP of the company who is in default is liable to a penalty of 50,000 rupees. Or in case there is a benefit accruing to such person, 5 times the amount of benefit. See, let us say 1,000 square feet is the property area in Viman Nagar, Pune. 5,000 square feet. 2,000 into 1,000, right? There is a benefit he is getting. 2 million. 20 lakhs is the benefit he is getting. Agreed. Now, that he has to refund it to the company. In addition to that, the penalty also he has to pay 5 times the amount. Means 1 crore he has to pay to the as penalty, or 5,000, whichever is higher. Okay. And this is without prejudice to the duty to compensate the company for any benefit received. So, in addition to compensating the company, he should also pay 5 times. It's very stiff. And I think it's good because this brings a lot of disclosure and transparency to the way directors are running companies. So they cannot get away with fraud. It's a protective measure for protecting the investor. Right? So we move on to quorum. Quorum is an interesting concept. One second. Sometimes questions are not clear, I cannot answer. Rule 18 is with maybe section 108E voting. Not clear. So literally you have to write in a proper sentences. I'm not able to understand. You are talking about 108E voting. Agreed. That much I'm clear. We'll come to that later. 108E voting. Hello. All special resolutions are special. Basic question. No, not necessarily. Alag alag. Special business alag. Special resolution alag. Some one or two rare cases special resolution may not be, but rarely. See, I cannot give it as a rule, but I can assure you almost all special resolutions are special businesses. Whereas in those days there used to be one example where we will say appointment is an ordinary resolution. Ordinary business, but special resolution. But by the very definition, you see, any matter done other than these at an AGM and any other matter is a special business. So, invariably, it will be a special resolution. So, yes. But there could be situations where it is a special business, but we make ordinary. Yeah. By and large, special resolutions are special businesses. As a practically, yes. But I don't want to commit and say like that. But one more thing, special business could be ordinary resolution also. Even an ordinary resolution is a special. So conceptually, alag alag, separate. Don't confuse. Understand ordinary business, understand special resolution. Don't combine the two. A matter may be special resolution, it may be special business. There are two different rules operating here. Right? So don't confuse yourself like that. If you are okay. But if you still want to confuse yourself and say all special resolutions are special business, no problem. But don't. There's no big advantage in making that comment. Because the rule for special business is 102. The rule for special resolution is different. Both have to be complied with. So, alag alag you see it. Any problem relating to screening, relating to technology, technical, please, I will not be reacting to it. The tech support people will be watching. They may give you some guidance. Okay, I cannot do anything. I am the teacher teaching the subject. I cannot guide you on tech part. But if the tech people are seeing it, they can give a reply. And if you want a clarity, please call the tech support numbers and get their advice as to what to do. So I've already done this. Moving on. Now we come to Quorum. Quorum is Carom is a board game. I'm sure you have played it. Carom, Carrom. Quorum. Because I am telling this because in ACS Institute, one of the students who wrote the revisionary test, that they used to write one completion certificate, CC. For writing the exam, they have to clear CC. So the faculty has to set a test which they will write. So one very simple questions I will ask, not complicated like what you will get in CA exam. What is quorum or define quorum? What is the quorum for a meeting of audience? Yeah, I have written quorum clearly there. In spite of that, that person is writing Carom, Carrom. That's why the confusion. Quorum, Quorum. Quorum. Quorum means minimum number of persons required to constitute and transact business at a meeting. If the quorum is not present, you cannot have a valid meeting. So the quorum is the number of members. Minimum number of persons required. So for a public company, the minimum number of members required for a valid meeting will depend on the total number of members. You have to see what is the total number of members of a company, and then you have to find the quorum. So if the total number of members is not more than 1,000, so totally we have 100 members, 500 members, 999 members, 1,000 members, then quorum is 5 members personally present. Personally present means the member has to come himself or herself. They cannot send anybody as a proxy. Personally present means the person should be a member and he should have come. Okay. So proxy will not be counted for quorum. Later on we'll come to proxy. I'll again repeat this. Because for quorum, the member should be personally present. Right. Suppose the membership is more than 1,000. That is 1,001 to 5,000. Then 15 members personally present. 5,001 exceeds 5,001 above. Then 30 members personally present. In the exam, remember this, they may give you a question on quorum where they'll say, so many, the company has 10,000 members. 25 members attend. Is there a valid quorum? 25 members personally present. Is there a valid quorum? No. Because exceeds 5,000, I need 30 members personally present. Okay. So the quorum for the general meetings of a private company shall be 2 members personally present. That's all. Sirf 2. There is no connection with the number of members. Anyway, there is a limit on the number of members, now 50. So that anyway it is there. So 2 members personally present form a valid quorum. Right? Public company only they have grade. Try to remember this. Okay. The quorum prescribed above shall be applicable only if the articles of the company do not prescribe a larger number. So if the articles of the company, whether private or public, say 10 members personally present for 1,000, whatever, then that will be the quorum. Right? But they cannot prescribe a lesser number. They can only prescribe a larger number. Means they can go above 5, 15, 32. They cannot go below that. The word personally denotes that a proxy, a person who is attending the meeting on behalf of a member, will not be counted. So to have a valid meeting, minimum you need for a private company 2, for a public company 5 personally present. If the number of members is more than 1,000 up to 5,000, 15. More than 5,000, 30 members personally present. Okay, should come. For this is good, because then with just 5, the board of directors cannot have some chamchas coming there and then passing the resolution. No, they should have minimum so much numbers. Joint holders of shares shall be counted as a single member for the purpose of ascertaining quorum. Suppose the one share is being held by 2 people, it can be held. Then both of them attend. It is not as if 2 members are attending, only 1 member. Okay. Though both are members, for the purpose of quorum, they will be taken as 1. Section 103 shall apply to a private company. You saw that now, only unless otherwise specified in the article. So it will apply to the extent that articles are silent. If the articles of the company provide otherwise, then that will prevail. Similar to 101. Similarly, IFSC public company can provide differently in the articles, right? Even lesser number can be prescribed. Okay, right. Good. But for the number, no. For minimum private company 2, they cannot make it 1. Other than that, okay. Quorum is, because 103 has other points also. Very importantly, what happens if the quorum is not present? If the quorum is not present within half an hour from the time appointed for holding a meeting of the company. So the meeting should be held. We call for the meeting at 10 a.m. Up to 10:30 a.m. we have to wait. The minimum number should be of members. The quorum should be present within half an hour. If at the expiry of half an hour the quorum is not present, what happens? The meeting is called by the requisitionists. You remember 100. You called the meeting. Yeah, you wanted that meeting. We refused to call. Now you are calling. You are not even able to get the quorum. Got the point? You are not even able to get the quorum. Then the meeting shall stand cancelled. Please note the word stand. Stand means by operation of law. and it's automatic operation of law. Suppose it says the meeting shall stand at cancel, it means it is cancelled by operation of law. No questioning it. It will automatically be cancelled. The reason is simple. The requisitionist wanted a meeting on a subject which, according to the board of directors, is frivolous subject. They invoke the power under 100. Then they call the meeting themselves. Chalo, call it. At that meeting, Baba, you should have minimum quorum coming. No, quorum is also not coming. Then what to do? Don't take. Meeting shall stand cancelled. In other cases where the meeting is called by the board of directors, then the meeting shall stand adjourned. Adjourned means it will be held on a day beyond that date. It will be pushed to another date. Okay? Shall stand adjourned to the same day in the next week at the same time and place. Let us say that we wanted to have the meeting today. Okay? 14th of June 2022. Meeting is called. Quorum is not present within half an hour. Then meeting will stand adjourned to the same day in the next week. That is Monday. At the same time and place. 10 a.m. registered office of the company. Right. So this is automatic. But suppose the board wants it on another date, then they can do so. Or to such other date and such other time and place as the board may decide. So if the board does not determine the adjournment date, then same day in the next week, same time and place. If at the adjourned meeting also quorum is not present within half an hour from the time appointed for holding the meeting, then the members present shall form the quorum. The members present shall form the quorum. See, employee come member, in case of private company, is a member. He can be counted for quorum. Don't confuse. That is for a different purpose. While counting the limit of numbers, you will ignore persons who at the time of becoming a member were employees of the company. Okay, you will ignore them. That is different. Don't confuse them. Once he is a member, he is a member. And as a member, he is entitled to all the privileges of a member. He can be counted for quorum. I don't want to use the word postponed because definitely cancelled is not. Don't get confused. See, the word adjourned means the board takes a conscious decision. See, the meeting is called, is held, and during the course of the meeting or at the time appointed for the meeting, the board decides to have it on a day, on a future day. That is adjournment. Postponement is even before the date of the meeting, we decide to push it. See, supposed to have the meeting on 14th of June. But last week itself, I came to know that there's going to be a pandemic and there's going to be a lockdown and all. Therefore, I announced that the meeting is postponed. That is called postponement. Before the date of the meeting when I do, it is postponement. At the meeting when I do, it is called adjournment. There's a difference between adjournment and postponement. Here the word used is adjournment. So I would prefer not to use the word postponed as similar, same as adjournment. There is a slight difference between adjournment and postponement. Adjournment happens at the time appointed for the meeting. The meeting is called, then only adjournment is possible. You hold the meeting or you are not able to hold the meeting, then only adjournment. Before the meeting is held itself, you decide to have on a future date. That is called postponement. See, in law, there are small differences like this. A good student of law will try to understand it and not try to simplify it and say this is that is this and that. They should know the difference between the two and understand when to use which. So, why don't you stop using the word postponement? You use the word adjournment only. Don't substitute it with postponement. It is different. Okay. Adjourned is adjourned. Postponed is postponed. Alag alag. Don't confuse. Sorry. I know you may not like what I'm saying, but what to do? Okay, they are different. You know the difference now. When it is postponed, when it is adjourned. Okay. Aradhana, in case you understood what I said, kindly put in a word there saying, yes, I got the difference between postponed and adjourned. So they are not synonymous. Don't use them synonymous. Both. I am going to hold it on 25th of June. I have decided, I have posted the notice. Before that date, I realize that some problem is there. I can't hold it. Then I inform all the members about the postponement. So I will tell them this meeting which is scheduled on that day will not be held on that day. It is postponed to another day. Okay, on 25th, we meet, we come there, we discuss the agenda, we find no decision is taken. Then the chairman will say it is adjourned. So he will say it's adjourned either on such a date, or he will adjourn it sine die, which means he will say the meeting stands. I am adjourning the meeting, and it will go to. We will inform you about the adjourned meeting. Okay, like that. So that is the difference, right? When you adjourn it sine die, which means without a date, you can do that also, the chairman. But here, this is not the voluntary act of the chairman. It is the act of law, operation of law. Stand adjourned. Automatically it will be adjourned. In case the board mentions the date, it will be adjourned to that date or time and time. But if the board is not doing anything, then same day, same time, same place in the next week. Okay. Whether a single member constitutes a quorum at the adjourned meeting. See, look at the wordings. Members present. Now, you might have studied General Clauses Act. Maybe you will study it. There you will find there is a clause in the General Clauses Act saying the words indicating the plural include the singular. Words indicating the plural include the singular. So singular includes plural, plural includes singular. So members includes member. So yes, so at the adjourned meeting, a single member can form a valid quorum. Since the word used is members. Again, the word used is members present. Therefore, proxy can also be counted. Whether a proxy will be counted at the adjourned meeting? Yes. Because the word expression used is members present, not members personally present. Therefore, proxy can be counted. Provided the original meeting was adjourned for want of quorum. Suppose the meeting was held properly, constituted properly, quorum is present, meeting is transacted, chairman is adjourning the meeting. Such an adjourned meeting, one man cannot become a valid quorum. Also, proxy will not be counted for quorum. But if the meeting is adjourned for want of quorum, that is stand adjourned for want of quorum, then single member can form a valid quorum and proxy can be included for quorum. Normally, proxy will not be included. In case of adjourned meeting or of change of day, this change of day, time or place is called postponement. Okay. Then the company shall give not less than 3 days notice to the members either individually or by publishing an advertisement in the newspaper which is in circulation at the place where the register office of the company is situated. So suppose either whether it is a statutory adjournment or a voluntary adjournment by the chairman, you have adjourned it now. Then for the adjourned meeting, you have to give not less than 3 days notice to the members. You can either give it individually or by publishing an advertisement to the newspaper, one in English, one in vernacular, you can give so that they will come to the adjourned meeting. Quorum shall be present throughout the meeting, not only at the time of commencement of the meeting, but also while transacting the business. The quorum should be continuously present. Members who have voted by remote e-voting have the right to attend the general meeting. Their presence shall be counted. See, we gave an option to you to vote. On the resolution, you can do e-voting. Later on, when you come to voting by electronic mode, you will understand this. E-voting facility is given to you. You have voted. But still, you are entitled to attend in person and attend the meeting also as a member. I cannot deny that right to you. I am holding a meeting, then you are entitled to attend. When you are there, even though you have exercised your e-vote right, still you can be counted for quorum. A member who is not entitled to vote on any particular item of business, if present, shall be counted for the purpose of quorum. Okay, only for quorum. He cannot vote, but will be counted for the purpose of quorum. The stipulation regarding the presence of a quorum does not apply with respect to items of business transacted through postal ballot. Obviously, yeah. For postal ballot, what's going to happen? I'm going to send the resolution by post to everybody. They are going to send back the mail saying accepted or not accepted. There is no physical meeting. Why there is a quorum? So this is obvious. Postal ballot, there is no physical meeting. The resolution is passed by post. So no need for a quorum. There is no question of a quorum, right? The concept of a quorum is not possible here. Only when there is a physical meeting, people have to come. Only when they come, we can say how many have come. Here you are sitting at home, you are going to sign and send. So for that, there is no need for quorum. But in e-voting, what will happen is, we will give you e-voting facility, you will all vote, then we will have a physical meeting also. When the e-votes will be counted and the votes cast in physical also will be counted for deciding whether it's passed or not. But in those cases, even a member who has exercised his e-vote will have the right to attend the meeting in person and he will be counted for quorum. Okay, here's a question from I think it's in your institute material only. Abe Limited has 2,300 members and the AGM of the company is to be held on 23rd February 2019 at 10:30 a.m. On the day of the meeting, 18 members were personally present by 11 a.m. and the chairman proceeded with the meeting. What is the quorum for this meeting? More than 1,000, less than 5,000. So 15 members personally present. So there are 18 members at 11 a.m. So at the time of starting of the meeting, quorum is present. There were 5 items for special business to be discussed at the set meeting, and by 2:30 p.m., 11 a.m. to 2:30 p.m., fellows have really discussed it. Agenda 1 to 3 had been discussed, totally 5. Due to some emergency, 4 of the members had to leave. That means what? 18 minus 4, it became 14. The chairman granted them permission and proceeded 4 and 5. 4 and 5 was passed only with 14 people present. Is it correct? No. Because the quorum should be present throughout the meeting. The quorum shall be present. Throughout the meeting. Okay. An extraordinary general meeting of Bug Hunt Limited, an unlisted public company, was held on 15th March 2022 at 11 a.m. The company has 6,500 shareholders. Around 11:30 a.m., about 12 members in person and about 100 proxies are assembled. Wow! I've got 12 members in person and 100 proxies. The proxies claim that the meeting has a valid quorum and demand the chairman to proceed with the agenda. Chairman refuses on the ground that quorum is not present. Who is correct? Of course, some of you will be putting the answers a little later, but since paucity of time, I have to push on. I'm going to give the answer. Quorum is not validly present. 6,500 shareholders, it will be beyond 5,000. See the word shareholder, this is the confusion. What is the word used here? Member. So, of course, I have taken this problem from the institute material only. So, that's why I have not corrected it. I will now correct it. See, you have to be very strict in using the word member or shareholder. I'm sorry, I am being a little too puristic about this, but yeah, members only. Let me see if I have to correct here also. Here it's members. Here it's shareholders. Sorry, it should be members only. Okay. I've already given you definition of members. In case the problem in the exam uses the word shareholders, please write a note saying it is assumed that all the shareholders are members. Please write a note. Okay. If you write that note, you know the examiner will have high regard for you as a knowledgeable person. You will be demonstrating your knowledge that you know the difference between shareholder and member. And that section 103 uses the term members and not shareholders. Okay. See, these are the small things that we can do to get more marks in the exam. Everything is crystal clear, sir. I have a doubt before. Okay, no problem. Thank you. No, if you have a doubt, please feel good. Yeah, before the meeting day, if a meeting cancelled and held later, it's postponed. And if the meeting cancelled at the time when it is going to be held and it's going to be held, then it is called adjourned. Absolutely correct. You have understood it correctly. So the meeting is called, people don't come, quorum is not there, adjourned, one way. That is adjourned. Meeting is called, quorum is present, but they decide to have it further discussion on a future date, adjourned. Meeting is called before the meeting date itself, we decide to cancel that meeting and do it, have it on some other day, it is postponed. In AO of private limited company, it is given quorum is formed of 10 member and 2 proxy are allowed for foreign member mandatory, then 2 proxy. Yes, if the articles of the private company have such a prescription, then no. Proxies will not be counted for quorum. You cannot see if you say 2 proxies are allowed, chalo, that is okay. See, the proxy will have a role only at the time of voting. For quorum, proxy should never be considered. Only 10 members will be, the 2 personally present. Proxy will not be counted. A private company cannot violate the act. What they can do is they can prescribe things like this. But proxies are not to be counted. Okay. This is my view. Even I am having a doubt, but it's my view that proxies are not to be counted for quorum. Right? Yeah, to an extent, knowledge of English becomes important. Sorry to be a little blunt about it, but what to do? Yeah, adjourned is used by judge of the court. Why? Rotary meeting is adjourned. Masonic meeting is adjourned. Adjournment is a common word used in meetings. So when the court is hearing the case, they will adjourn it. Means we'll have it on some other day. Hey, court will only adjourn. Main business they do in the court is adjourn. They will never have finally they'll give decision. Wonderful. Great. So I was hoping to cover proxy today, but it looks like I cannot. So time is really my problem. It's okay. We'll somehow finish the topic. But I will be running over some of the topics which are easy to understand. I may not give. I think I'll just run over it. But this is important. That's why I'm spending it. Okay. So with this, I think the time now is 9:33. So let me stop here. Proxy is very lengthy topic. We will do it in the next class. Hopefully, we will complete the syllabus on Saturday. Once I complete the syllabus, then and only then I will upload. Okay. Yeah, a good question is asked by Pooja. Let us see. See if this bug hunt case, the quorum is not present, right? Good point. The quorum is not present because the question asked is what are the legal consequences? The legal consequences, the quorum is not present. Chairman is correct. But the meeting shall stand adjourned to the same time, same place in the next week, or the chairman can decide the date. The board can decide the date. Whatever it is, at the adjourned meeting, proxies will be counted for quorum. Beautifully put. Yes. Proxies can be counted for quorum. Yes. For quorum. Don't say want of quorum. Proxies can be counted as quorum or for quorum. Okay. Fantastic. I know I am very worried about my time management, but I hope to complete the topic by Saturday, inshallah. Till we meet on Thursday, let me say goodbye. Have a great day. Bye. Sir, class over, sir.